Okay, interesting bifurcation in the market. So we have the stock market going up, and then we had gold and silver. I'm being specific, the gold and silver going down, the miners. So that's something I'm going to cover in today's video where I recap the Wednesday close. Let's start with the market. The S&P, very bullish, very bullish. I mean, I disagree, but it is what it is. Look at that close high of day, closed above the descending line. So we've bounced and we're still strong. Honestly, normally you're supposed to just continue and test, and this is actually no longer applicable. Now it's a question about testing the old high. Do we break it and go higher, I suppose, to the next resistance point, which I don't think it should get to, but I've been surprised many times. So S&P strong, Nasdaq pretty much the same chart pattern. Can we test the old high? And by old high, I'm talking about this high here. And can we go higher? Let's see if we get there. Just like the S&P, the Dow Jones is lagging. Can we break out of this channel? Still hasn't done that actually. And if we do, can it then touch and take out the next high above? Doesn't seem too far away, but honestly, it's been lagging. But that's the pattern it needs to perform. The Russell that broke out, actually, that was the first to break out, but that has maybe more room to move. I mean, it's got a higher uh, trajectory to get to here, but let's see. It's the same sort of chart pattern across all four. Can it touch and then take out its previous high and then get to the next one? So really, they're all bullish. The Dow Jones, not as much. It's been a bit special lately. It's been underperforming lately, but it's made a massive move and held it. It's sort of flagging up here. So if that starts to take out this, it becomes the strongest mover again. So for me, the markets, I don't understand it. The markets are doing very well. To be honest, if you look at the DAX, which is the German market, that's also really strong. That's stronger than the US markets. The FTSE, for example, maybe the worst economy out there. Basically new highs. It doesn't make sense. The only way it makes sense is if this is pricing in inflation. Like the Zimbabwean stock market, despite the hyperinflation, made the biggest moves. So is it really just inflation being reflected in the price, the price of the stock market? I just still think that reality needs to, even if you have inflation, with what I expect is coming, big recession, at least a recession, that reality should reflect a drop in those prices. But it is what it is. Let's respect it. It's moving up. And therefore the VIX is moving down. Look at that, a close down here, looking very ugly. This breakout of this descending, it just didn't hold. Makes sense because the markets kept going up. That bounce is continuing. So if we do test those highs, those prior highs, these sort of highs up here, the Nasdaq 314-ish, you can definitely expect the VIX to be testing and maybe even closing below this level. And if I zoom out, do you really think the VIX, the volatility index, should be trading down here with World War III? And I don't know. I guess I'm used to how ridiculous the market trades sometimes. But anyway, that's the market. Market went up yesterday. Let's look at interest rates, which is more important. And again, either the interest rates or the bond market going down because the interest rates are going up, either the bond market is correct or the stock market is correct. I don't see how you can have both of these continue their trajectory and not have one of them crack first. The 1 year just keeps going up. Okay, it touched and retraced, but even went high, went to new highs. And today so far we're moving up. It's very early in the day. I'm just going to call this a sideways move at the all-time highs. So very bullish yields. 2 year, okay, it didn't close near the highs, but it's not exactly reversing strongly. So for me, we're just sort of going sideways, and our destination is up to the old highs, just like the stock market. 5 year closed above resistance, and I think this is pretty clear resistance. Maybe this little candle had a higher, but still, we went definitely to new highs for this range, closed above, and now we're going sideways. I don't know if we're going to retrace a little bit and then break higher, but for me, eventually, whether it's sort of sideways up, it will happen. It will happen. The 10 year is just slightly behind, still the same sort of trajectory. Let's get there first and then break the new highs. This would be very important. If the 10-year makes new highs, I'm sorry, but the stock market probably at that point will say, wait a minute. And the 2-year, same applies actually, maybe when that hits its old high. I mean, the Fed has to follow the 2-year. That's basically the rule. So I don't know, maybe the stock market is front running. I saw this equation where it's almost like if yields are going up, then that's good because that means the stock market will crash early, which is good because then the Fed will cut rates early. It's just this insane formula that might even be true. But anyway, you don't have to really understand it. You just have to trade it. The 30-year, that's definitely lagging the most, which makes sense. It's at the end of the yield curve. The 10-year, I always like to go through the European yields because they are significant in my opinion. That is, I don't know, 1 or 2 days away from testing new highs. And this is the general EU 10-year that I selected, which is essentially a direct representation of the German 10-year, which is the most important one. But that's pretty important. I've been flagging that for a while. I just don't see how the DAX and the CAC 40, which is the French market, which is also, by the way, reaching new highs. They're all reaching new highs. So maybe this is an indication of what the US market is going to do, despite them fundamentally having major issues and the yields just making new highs imminently, the stock market's going up. Yeah, that's just something I thought I would bring to your attention. And then you finally got the British yields, which, okay, they're definitely lagging their counterparties, but I think they'll also go up. So yields going up, stock market going up. Again, one of those two can only hold that pattern. The dollar index is also like yields with a small delay. So yesterday we didn't close above 104. I said 104 is the very important level, and I have to be precise about this because I think it's a pretty significant sector to watch here, the DXY. We did venture above 104, and it was a very nice day. We did close above the descending for the first time. So I think that was a very bullish day. Obviously, it was a very green candle too, so it was a bullish day. Okay, today the day is young. I mean, we're just going sideways, but I think today we may actually, I don't even care what the stock market does. I feel like we might close above 104, and that will give the green light for this move up here, which should coincide with the yields continue to creep up, which should put extra pressure or start the reversal in the stock market. I still think that the dollar and the yields, especially the yields, will put the stock market in check. So, the dollar index, very nice move yesterday on the upside. And let's move to commodities. I think that is what actually put pressure on gold and silver. I'll start with copper, which had a big red day, big red day yesterday. It's unfortunate that I don't do the video on the same day. I fell asleep again, but big red engulfing day. Okay, so far today we're making up for it a little bit. We're sort of holding this temporary intermediary low here. Let's call it $4. I still feel like we're going to go lower. And if yields go up, the dollar keeps going up, especially the dollar. I think the dollar seems to have a lot of influence on the commodities at the moment. And if it does continue, like I just showed you, sideways up, then I do feel like copper will break below 4 and actually close maybe even at one point below this ascending line, and then just sort of drift lower. Obviously first step maybe 3.7s. We'll see if we get to this ascending level, but copper is obviously a great buy long term. And it usually moves with the stock market a bit. So, with the stock market going up, you'd expect it to be stronger. So if the stock market reverses and the dollar continues to go up, you can definitely expect a small cascade down. So for me, I'm still bearish copper, but I'm not trading copper. So I'll just leave it there. Natural gas, honestly, this one, any moment, that pop, I'm just going to stick with it. Even if we go lower, I mean, it's not really fair. I'm not in natural gas. I'm in a particular stock, but where I honestly would have bought is, I remember 4. I would have bought at 4. I think I said I'd buy at 3.5. And then I said I wouldn't do anything until 2.5. And that's typical. I found myself in those types of situations. And if I had actually done that, if I had bought at 4, 3.5 and 2.5, my average would be pretty terrible. Although I wouldn't be, okay, basically three and a third. It would be here. I'm just going to leave this, 3.3 or whatever. Let's just say here. I mean, look how much of a move I would require. 28-30% move. Sounds pretty bad. I think that's done in 1 week at least. I mean, easily in 1 week. And I wouldn't have a problem with that. If you zoom out and you say, okay, my average is here, and I expect natural gas eventually after several months to be trading probably at 5.5, this price support here. So I don't know if anyone's in natural gas. I'm in one natural gas stock, which is not really moving with the price. So it's moving on its own sort of news and a bit with the stock market and a bit with natural gas. But yeah, I just thought that I would sort of reassure anyone that I don't think this is a problem, buying here. It depends what your average is. Obviously, if you bought all the way up here, it's different. But I still think natural gas will eventually test this range, maybe in 1 year or I don't know, but several months at least. But still, it depends on your outlook. You should be trading according to your own personal characteristics. But I don't think there's a problem in getting to 4. Let's see. I'm going to be tracking natural gas a lot. A lot of people have found it pretty interesting lately. For me, just sideways until the one point it breaks out. If it, by the way, goes lower, then I guess you're looking at the twos and below. Let's see if we get there. I think that's a lot of people will be buying that as a pure value play. I mean, I would definitely start to get into some sort of derivative of some sort to have exposure to natural gas. Oil, yeah, sideways. Let's see. It looks a bit like the market here, where can it test its old high and then break higher? I still think that oil is more of a buy than a sell here. I still think we can get to the low 90s. I've said that for a while. So I wouldn't be surprised if it goes up here, tests its all high. Maybe it starts to move with the market. Let's see. What I really wanted to cover very quickly, though, is gold and silver, because this finally did what I wanted. It finally went to the 1830, 1831. I don't know what the low is, but for me, that counts. We've hit this level. I mean, if we bounce from here, fine. Can we get to 1800? That's the next level. Yes, we can. If the dollar, a bit like copper, if the dollar does go up, remember that chart I showed, if it closes above 104 and then starts to move to 105.5 or 106, I definitely think that would equate to gold being at 1800. So that's still on. See, now it makes a bit more sense, this chart. Break out in the channel, break above the channel, a bit ridiculous. Then this continuation, I remember just saying, I flabbergasted, can't understand it. Obviously, I was benefiting from being in the minors, even though I sold a lot on the way. And now finally the minors are essentially below my sell points, most of them. So I did buy back yesterday. It's my first buys, my first level of buys. I did, I think 3 or 4 little buys on the way down, maybe a few days ago, but they didn't count. They were so minute. It was more psychological for me just to know, okay, at least I bought it in case it reverses, surprises me and goes up. But this was my first actual buying. Again, I really wanted to go lower, as low as possible. I have so much on the sidelines. I've been selling all the way, and I really believe in this sector. And I think this move here, this huge bounce, just indicates, look, we're probably not going to make new lows, and this is the place to be for inflation. If the stock market is really going to go up to new highs because of inflation, then gold should really outperform. And maybe the market hasn't understood that yet. But basically, for me, the gold and silver sector and the miners are the best place to be for this inflationary period. Even if we get disinflation, even deflation, I still think we're gonna have high inflation for a long time. Anyway, fundamentals aside, for me, 1830, beautiful. Maybe I'll quickly go through the miners I bought. I bought the miners, even though the miners look like they're not at their own level. I bought the miners off gold on 1830. Next stop, 1800. But let's see, maybe we bounce back up to 1860. That can happen too. We've hit the bottom. We're going to go back up and test between 1860, 1880. That's also possible. Silver, okay, that also went down. Didn't tag its support yet. I think it just didn't go down enough because you know, it was at a certain point when gold was at 1830, and then when gold reverses and bounces off 1830, then silver goes up too. So if we get to 1800, then I expect silver to be at 21. So this just happened to be the low. This 21.5 just happened to be where the support was when gold was at 1830. So I'm just really watching gold. I think the levels are more obvious for where we are now. But I think when gold is 1800, silver's level will be more obvious. It will be 21. It should be 21 by then. So, and I think a lot more people are watching gold at the moment, especially when they're trading it with news. It's just easier. And I just noticed gold is more actively traded than silver. The miners. So as you can, I did buy the miners despite them not really having any obvious support. You could maybe say this area here, but I was basically trading off gold, which is kind of what I was just saying. I was just watching gold. Gold's at 1830. That's a little bit of a level. I'm buying gold when I think the low is in. And I pretty much did get the low actually. GDX. Okay, you can see the candle. We did obviously close above its low. So my buys are all in the money at the moment. But I really want it to go lower. And just like silver at 21, I think GDX at, let's call it 20, I don't know, 27.5 will be the level we're at when gold's at 1800, if gold gets to 1800. So let's see. I've bought for now. This area is bought. So if we visit 28.5 again today or tomorrow, I won't be buying. I bought this level. I bought a decent amount. I'm only waiting for the next level. GDXJ, that made an even better reversal. And it's been weaker, so it's gone down more. And then when the price moves up, it goes up more. That's good. That's how it should act. Just get rid of these notes. Basically did what I wanted, an instant drop despite yesterday's nice close. So, but yeah, this one also bought here. And I also think that this will be the area it's at if and when gold gets to 1800. So I'm just going to be patiently waiting. If we reverse and go all the way up, I haven't really considered this, but now that I think about it, I will probably trim a little bit here because this is what I like to do. I like to trade the ranges. I've still got my core position, and from the low to here, almost 10%. A nice little trade in out. And if it comes back down again, well, actually, if it does go up and then back down again, it'll start to look bad as a pattern, like head and shoulders. Shoulder number one. Well, this would then become shoulder number two, and then this is the head. And then what happens is maybe we take out this ascending and come back down. So that'll be a really good, then you'd feel really good to have sold what you bought here because then you'll be able to buy it back all the way down here. So I love to trade long-term holds. And I'm getting ahead of myself. So let's not think about a bounce yet. I don't think a bounce is necessarily in the cards unless the stock market goes all the way up and the dollar collapses, which I don't see happening in the very short term. So I'm very happy with my buy in the miners, and I'm waiting for a lower buy. And I think that will only happen if gold flushes to 1800. The miners I bought bought Barrett Gold, 1701-ish. That was a level that I didn't have enough Barrett Gold, so I wanted that. So I bought that. I bought Agnico Eagle. No, not Newmont, because still got enough of that. Agnico Eagle, despite knowing that this pattern has only just begun, it's only, and I think this ascending support is really correct. We've just dropped below ascending support and we haven't got to any obvious horizontal support. I looked at gold at 1830 and said, nah, Agnico Eagle is too good, too strong. It's probably the best miner. So I just bought a little bit of Agnico Eagle. Wheaton I did not because it's too high still. Pan American I did because it came back down to the horizontal. I didn't buy any yet. MAG I did, even though I bought some. I chased some the day before. It's come down a lot, so it's worth a lot less than the others. Goldfields I did again. I just think it's a very good stock, so I bought some more of that. And then I really went on the silvers. So first Majestic, bought some of that. Fortuna, no. EXK I did. I forgot where, 30, 304, 305 or something. CDE I did, and I did nail the low. This one I love. I think it's 317 or something like that. 317, 318, 317. And look at this beautiful candle, hammer. Closed really, really well. It was down sort of 6-7% at one point. And then, so And I looked at it, I thought, okay, I mean, it could go lower. Gold at 1800, maybe there. And then we could flush to new lows, but I think it's a beautiful company, a beautiful stock. I'm not even sure how beautiful the company is, but great stock to trade, huge moves. I mean, imagine we bounce from this lower here all the way to there. That's 50%. That can be done in 2-3 weeks. And I didn't, oh yeah, I bought Termalina just because it came all the way back down to here at 30. And a bit of Rainer, same thing. But these are juniors. It was very light buying. The silvers were medium buying, and the seniors were also medium buying. So it was just enough for me to say I'm in at this level, 1830. I've bought 1830, and if we go to 1800, I'll buy again. So very happy to finally have bought miners. Finally, Bitcoin. I really don't understand Bitcoin pumping this much. I know I had a good day the day before, and huge pump. I thought it would be news. I didn't see any, just massive move up. Good for them. 25,000 should be resistance, but we're pretty close to it already. To be honest, if we take out 25,000, I haven't considered the next move. I guess it's a question of reclaiming this old range here. Well, 30,000 then. Next would be 30,000. Nice round number. And if we go above that, then it's 30,250. But very impressive. And I'm actually not sure why. Yes, it's been following the Nasdaq. The Nasdaq went up, and the Nasdaq can still go higher. Remember that chart? So definitely hit 20. It will hit 25,000 or 24,900 and whatever. But I'm not sure why. Just pure risk on speculative stocks are getting all the attention at the moment. So that's probably why. Can't say I'm bearish. You hit that, you come back down. I don't know. Let's just watch Bitcoin. I'm just going to watch Bitcoin and the Nasdaq. For me, it doesn't really make sense, but you've got to respect it before you understand it. So let's see. Still 2 more days of trading left. Good luck. Hope you enjoyed this.